Hey everybody, Happy New Year. Welcome back. Took a little break and we don't have a guest today. It's just gonna be, you guys are stuck with Nancy and I. But today we've got there's some interesting developments that keep happening politically around the world, both here and also abroad. Some of them I think Nancy and I, when we talk about these things, Nancy, you can't make some of this stuff up. You think if you had a good writer like John Grisham, be like, yeah, here's the plot. Like, so the president of South Korea basically tries to pull a coup while he's president, and then they try to arrest him. No, that would never happen. No one believed that.
How do you pull a coup if you're already the president? That's a good
Yeah, usually you try to pull him because you're on your way out.
right.
Or in South America, you're in your pajamas and you're in a plane leaving the country.
Yeah, exactly.
Yeah.
I'm gonna try that here at Laffer Tengler Investments if I can pull a coup. Well, so then in addition to the craziness all around the world, we had pretty rockin' equity markets with the S&P, the NASDAQ, and even the Dow ending in really good shape for the year. And I think one of the things I keep hearing from clients is that it? Should I put money to work now? And I just want to remind you that our investing thesis has been that this environment is analogous to the 1990s. And let me just tell you what the market did in the second half of the 90s. 95 up 34.1%, 96 up 20.3. 97 up 31%, 98 26.7, and 99 19.5%. So this can go on and on if productivity continues to improve. And what really canned us in the late 90s was that all of the customers for Cisco's products went out of business, because remember, that was internet driven. Arthur, you remember this. I know you're not a stock guy, but you remember they were measuring the eyeballs on the website. Well, that was the internet, right? And what we believe is that generative AI and cloud computing are much more powerful, and the customers of NVIDIA's products are people like Amazon and Google and Oracle, and Microsoft. So these companies have robust balance sheets, and they have capex budgets in the 50 to 60 billion dollar range, and they're still kicking off 30, 40, 50 billion dollars in free cash flow. So this party can continue for quite some time. Don't pay attention to the pundits, just listen to us. We've been really right on this stuff, and I think you'll be able to enjoy a really happy 2025, which is not to say it won't be volatile and filled with lots of posts on Truth Social and X.
Hmm. Well, and to your point, like, it was Microsoft, I think was it Friday, they announced $80 billion of additional investments in
Yep.
AI and infrastructure and data centers.
Yep.
And one of the topics we're going to bring up today is, I think, Canada. But they're talking, the conservative
I
potential.
love this.
Yeah,
Do
he
tell.
talked about, hey, we'll build nuclear plants, we'll build any energy production. You guys worry about infrastructure and all your chips. We will sell you as much power as you guys want. How about that?
That's awesome.
And,
Yeah, that's
but
great.
it's
Isn't
80
capitalism
billion.
great?
Yeah.
Yeah. When push comes to shove, people act in their own best economic interest, and we would love to get some help on the energy front from Canada, our friends in Canada.
But the interesting thing, Nancy, I think, with all of these things we talk about, is even though it's kind of more obvious, some of the tech names are going to say potentially succeed in an environment like this, there's all this dislocation that's going to happen too. So the hard part is, the easy part is saying, okay, NVIDIA, whatever it is, Microsoft, these guys they're huge players. They're already market dominant. They're going to continue to invest. They're going to be the kind of typically at the forefront of this type of revolution. But AI is going to cause new winners and losers throughout the rest of the economy and the rest of the stock market. So there's lots of other opportunities to win and also lose if you're not paying
Yeah.
attention. You don't know what you're
But
doing.
you're right. I mean, we're going to talk about that in my 5 for 25, but um, because there are losers, and I'll just give you one right now, and then I want to go to Michael Barr resigning offering his resignation at the Fed. But so think about it like this: would you rather own Walmart, who has pivoted to all the new technologies, and the stock price is up significantly? I could pull up the 5-year track record, but I don't have it memorized. Or Kohl's, that has pivoted to none of the new technologies and may actually get taken out or have to declare Chapter 11. So I think there are really clear cases. Some of them are super obvious, and that's what investors have to pay attention to. Which management teams get it and are embracing the new technology. But let's talk about the Fed for a moment. I mentioned to you earlier today, Arthur, that Washington D.C. is shutting down because they got like less than a foot of snow, and wasn't it in the Revolutionary War where we had soldiers who were you know walking through feet, multiple, how do you say that, yards of snow with no shoes and no outerwear that like we have now. But these guys can't even get into their plush offices in DC. So I think
Just a picture, isn't there, like Washington and a bunch of soldiers like rowing through like literally icebergs across?
yeah.
Like, yeah, nope, sorry, gotta go. Yeah,
Well,
give me
I
my
saw
mitten.
the Bob Dylan movie last night, so I'll just say the times they are a changing. That's for damn sure. But so let's talk about the Fed. I mean, I think this is great news that we're going to get rid of the head of regulation who basically failed at every corner, or banking supervision, brought us Silicon Valley Bank among others. And what do you think? Who do you think the appointee is going to be?
I don't know, but it's great because well, I guess it is ultimately very good. I mean, he oversaw. I think he was the head of compliance, Nancy, when the Silicon Valley Bank
Yeah,
debacle happened. And it wasn't just one bank. I mean, people remember Silicon Valley. There were a couple, and then the
right.
Fed. We had to come in and like basically backstop all of these banks, these mid-tier banks that have made bad bets on their portfolios, bad duration bets.
Yeah.
Which, by the way, we don't hear about anymore. I have no idea if that money was ever paid back, if the government ever got its money back, if they're still sitting on it. I assume they're still sitting on it.
Yeah.
But this guy was at
Terrible.
the helm.
Terrible. We would be fired. And the same for Mary Daly in San Francisco. They got way too cozy with the heads of, in this case in particular, Silicon Valley Bank. And there were all sorts of warning signs, but they really didn't do anything about it. And there was no head of of compliance and asset and liability modeling at the bank right before for like 9 months before it happened. Just outrageous. And yet it gets swept under the rug. And so I think this is really a good opportunity for President Trump.
Yeah.
Yeah.
But we also talked about this. Okay, so you replace Barr. But there was question about, Jay Powell stepping down, because there's been Trump had some criticism earlier, although he said he wouldn't ask for his resignation. But, when you look at the Federal Reserve and people that serve, especially as chairman, like this is the end of the line. Like they don't go on to run for governor of a state after running the Fed. So this is the top job. This guy is not going to step down. Like it's just
Oh,
not.
he said as much. I mean, he was
Yeah.
asked it. So the way we divide up the responsibilities at Laffer Tengler is Arthur gets to do all the fun stuff, and I sit and watch the press conferences with the Fed. And he was asked, "Will you step down?" And his answer was no. Like it wasn't, well, I'd certainly, there was no humility. And he was asked twice, and both times he said no. Just like I would have said to my 11-year-old or 12-year-old when, they asked if they could drive the car. No. So
Didn't they trick Arthur Burns? I think basically they got there was a Fed governor that I think it was Nixon. Maybe no, I'm trying to remember. There was a Fed governor that basically was tricked. I think it was by Nixon or maybe Carter. Like, hey, I'm going to give you a better job, and then he stepped down. They're like, nah, I was joking. You're gone. Fool me one.
that's Washington. I think it happened to Richard Nixon, by the way. So
Although I think closing it down for the day or for probably a couple days, since we're having snowmageddon here in the South and the Midwest, right? I'm here now. Well, Nancy's not getting the great weather, but that probably increases GDP
because they can't go to work.
Right? They can't hurt us.
That's right. I'm going to go lay out by the pool here in Scottsdale after we're done. So. Okay, so let's shift. You've had some pretty big news in your global strategy. So tell us what's on your mind. Justin Trudeau, aka Blackface, is what? Is he?
I mean, he's done. He's cooked. He's stepping down. So they're going to try to find someone to replace him. More than likely, I think it'll probably be the woman that just left. And she kind of precipitated this. This was his key ally. She'd
Okay.
been there forever, and he basically was demoting her. Is what the rumors were. And she decided she didn't want to take it, so she left and burned the bridge on her way out. And he was already hugely vulnerable. The election polls have been really against the Liberal Party, Trudeau's party, and the Conservatives have been really dominating the polls. I mean, it'll be a sweep if they cause an election. It won't be like this France where there's this kind of hung
Really?
government. It'll be a sweep outright, which is great for, I think, the economy and for economics and for growth in Canada, because Canada's really lagged here. Um, that being said, we added Canada to our global strategy back in December. This is why we did it. Some of these things you got to get ahead of it, and you take the volatility on the front end. But it was really, all the signs were there that he's been under a huge amount of pressure and threat. He's really mismanaged the economy. Canadians are really unhappy, and the Conservatives have what looks like kind of, I'd say it's kind of like a MAGA light platform. They're pro
Okay.
energy. They want to cut taxes. Canadians have this huge unaffordability in real estate. Does that sound familiar? The Canadian dollar has been under pressure by the US dollar. The US dollar is beating up everybody, but they've had all sorts of economic problems. It's reflecting back in the stock market, but the stock market should be forward looking.
Yeah. And what
So,
did you get out of? Because I feel like that was just a really brilliant move.
oh boy, now I got to remember what I sold.
Um,
I sold South Korea, which is another. I owned South Korea because I liked it, because I want to be in Asia, but I didn't want to own China for a long time. I still don't. But like, this is one of those, John Grisham novels. You can't make up the political intrigue of the president of South Korea was in the minority party, so he couldn't get policy passed. So he called basically martial law to try to get rid of the legislation so he could put his policies in. It backfired. And now they're trying to arrest him, but his security team is holding off the people from the federal police from coming in to arrest him, to serve a warrant, to drag him in, to make him testify. I mean, oh my gosh.
I can't wait for this movie on Amazon
I would say
Prime.
Banana Republic, but there's no bananas in South Korea, let me tell you. What a spam. Maybe it's a spam republic.
But I love your point, because like you anticipated that there were issues there. You got out, and I imagine these issues are going to stick around for quite some time in South Korea. And you
Yeah.
went ahead and looked where there was a new opportunity, and you got into Canada, what I think is going to be a really good entry point. And folks, that is how you make money in the market. So
Yeah,
well
I did
done.
that. I got rid of Vietnam, even though I don't dislike Vietnam. I just found a better opportunity. I think Argentina, it just from the standpoint of upside potential,
Right.
is really attractive. I think my dad used to tell me the story, like, risk is very different when you're on the 10th step of the ladder versus the first step of the ladder.
Right. That's awesome.
Going from one, your market's at one and you go to two, that's 100% return. But if your market's at 37,000 or
Yeah.
whatever, you can fall quite a bit further,
Yeah.
easier. Yeah.
As Japan did. What did it take? 40 years for them to recoup the levels that we saw in the early 80s. But I learned a lot of lessons from your dad. He referred to them back then as drunken teenagers with the keys to the car. Um, but he also taught me a story about, and you bring it up all the time about cutting the tail off the dog. You do it all at once. And I'm like, can we talk about something? Is there another way to illustrate this besides
Little bit of
rabbit?
little bit of insight into my childhood.
Yeah.
No wonder I cry myself to sleep every night. But I was not the drunken teenager driving the car. I want to be clear. That was a metaphor. It was not an actual event, or at least not mine.
Oh, but we don't want to disabuse our viewers of what a happy fellow he is, but there's another dimension, let us say. But we love him. Okay, so I think, what else did you want to talk about globally? Aren't we supposed to have a special picture of you going around the world?
Yeah, we were
Yeah.
supposed to, but I think we front and ran that
I
one.
have a
I'm
question.
a guy, but hey, come on.
I do want to ask you quickly about the UK and this X attack, and if not just Elon Musk, but can you just kind of explain what's going on? And I think out of the UK, right?
I got out of the UK actually when I saw the elections coming, when I saw Labour, because I looked at the policy mix again and
That's
said,
right.
this is going to be ugly because they're going to sweep because the conservatives, were so weak and so much infighting. You had Boris Johnson got caught up in the whole COVID scandal and all this other scandals, and then Rishi Sunak basically had a contested election, and it got really nasty within the party infighting. So it was clear Labor, all the polls were saying Labor was just going to crush the conservatives, the Tories, and they did. But again, Nigel Farage, like this guy is just incredible in the sense of where he's come from and where he is now. So you have the Reform Party, and they now have more people signed up as voters for the party than the conservatives do, like officially. And if you had election poll now, I mean, the Labor government would get crushed. I mean, they can't get out of their way. They've done massive tax increases. They're going to increase spending. The economy is not doing great, especially really, stuff like, I mean, there's the headline stuff like taxing private school tuition. That's chump change. It's the payroll taxes that go after just the employer. It's the paying all this money to get the rail and health and the NHS, which doesn't make any money. It's a horrible system, public system. Same with Canada, by the way. um,
What about these gangs that are raping young women and
it- yeah, that in the UK. That's the
yeah,
stuff that can bring down an administration. Yeah, the question is how much momentum does it get? It's like the COVID where they were having the COVID parties and all that stuff. They had parties that literally took down Boris Johnson. Now his personality helped. But I think Keir Starmer, the current prime minister under the Labour government, he's definitely prone to that. There's a lot of hubris there, and that tends to get these guys.
yeah,
So if this thing gets traction and really starts moving, Nancy, and I don't really want to talk about the topic because it's such a horrific topic.
yeah.
But if it has traction and it actually, and I think he was actually he was actually associated with this whole thing. The cover up is what they were saying. So he personally will get nailed if they call a snap election there again. I think the Reform Party. I don't know if they could take an outright win, but Labor looks like they're on the road. They have a really bad PR problem, and the voters are really
Terrible,
unhappy. Well,
terrible.
you get put in jail there for memes. They put a
Yeah,
14-year-old in jail. A 14-year-old for posting a meme.
yeah,
We're not
crazy.
talking like KKK stuff or Nazi stuff. We're talking about memes that are making fun of government or some other stuff like that. Like they put people in jail.
Yeah, it's nuts. I mean, and I'm just glad that your memes aren't out there for public to see.
Thank God.
I had to block him, folks. I had to block him. All right. So I think are we frozen or no? Just me.
I think you might be.
Yeah, that's a good look for me. All right. Well, I hope the
I
producers
would say you should show people your shoes. Is what you should do.
they're so amazing. Um, okay, well, Taylor, I hope you can fix it, or maybe I can't. That's a good way to fix it. Um,
Put me
sure.
up.
We'll be right back, guys.
Thank you.
All right, I'm back, unfrozen. I wish I'd seen the movie so I had something clever to say, but I did. I
As I
did.
said, this is your favorite segment, Nancy, where you get to talk all the time.
Yeah, so 5 for 25. That's what we're going to talk about. But first, I wanted to address the volatility we saw at the end of last year. A lot of people thought that that was, due to the Fed meeting. Some thought it was because there was going to be this contention over Speaker Johnson's election. But what it really probably was just good old fashioned portfolio manager window dressing. Um, and in particular, what drives volatility in the very short term are the algorithms. So they read the headlines, the computer programming takes over, and that's where you get the volatility. We argue that kind of volatility is the friend of the long-term investor. But the other source of it are hedge funds. So Arthur, I'm going to give you a quiz. Unless you read my commentary, which you never do, so I'm not at all concerned.
I
What
can't read.
average hedge fund returned in 2023?
23?
Yeah, the market was up 26% in 23.
They're probably up 8. Average hedge fund?
6.4.
Okay.
And then through September 30th, the average hedge fund, and this is from Hedge Fund Alpha, was up 11%. And over that same period, through 9/30, the market, the S&P was up 22.1. Over the last 10 years, the average hedge fund has been up 7 to 8%. So I think it's okay for us not to no longer call that the smart money, and for investors to have confidence in their assessment of what they want to own. And I mean retail investors as well as us. But we picked 5 for 25. I would have liked to have picked 10, but it didn't sound as cool. So the 5 for 25 come out of our 12 best ideas portfolio. And the first one is an AI play, but on the software side. So Amazon, that's the name that I want to talk about just briefly. If you look at the company, well, first of all, if you look at growth stocks, earnings growth for growth stocks is expected to be 16.2% next year. The earnings growth for value stocks is expected to be 9.3%. And so we want to own the companies that are generating solid high double-digit return earnings growth, and particularly because it looks like the economy slowed at least somewhat in the fourth quarter. So you remember we went into the quarter with GDP now for the fourth quarter at I think 3.2%, and the last I looked was yesterday. It was at 2.4% growth. So decent, but not super robust. And so this is when you want to own the companies that can generate earnings growth. So my favorite, and the one I'm going to spend the longest on, is Amazon, because I talked about this in a Wall Street Journal interview as our stock pick for the decade a number of years back. But you have a new CEO in Andy Jassy who got Tim cooked. So when he took over for Jeff Bezos, everyone, poo-pooed it. They sold the stock down, said he was no Jeff Bezos, which is exactly what they did with Tim Cook. He was no Steve Jobs. And Tim Cook has generated the most total return for a stock under a single CEO of any company ever. It used to be NVIDIA, and then NVIDIA sold off. But importantly, the company is growing earnings 21% in 2025, 22% in 2026, which means that on a price earnings to growth basis, so what am I paying on a price earnings basis for future growth? It's trading at 2 times in 25 and a little bit over, it's a little under 2 in 25 and a little over 1 in 26. That is not excessive valuation. They're going to spend $60 billion in in CapEx, and they're still going to have 50 billion in CapEx, and they're still going to have 60 billion in free cash flow, which is after CapEx. So the AI movement is real. They are benefiting in their cloud business as well as their advertising business, and it will continue for some time. So we still like the name very much.
It could be the Tengler 10.
Did you say Tangler?
Tengler? I didn't say detangler. I said Tengler 10. Nancy Tengler. Then Nancy Tengler 10. Say that 10 times fast.
Arthur always calls me Mrs. D. Tengler. I visited my son recently in Hawaii. He's stationed there, and the sign on his house says D. Tengler. I couldn't stop laughing. Anyway, and that, along the same vein as ServiceNow, it's one of our favorite names. It's been in the 12 best ideas portfolio for a very long time. One of the best CEOs in the country, Bill McDermott, and he recently, on an interview with Mornings with Maria, said that he expected AI spending to be $20 trillion between now and 2030. Think of them as the conductor and the interpreter of data flow, AI data flow on the cloud. They are, as they said recently, and we would agree, they are perfectly positioned, growing 22 to 25% annually. They have been for the last 3 years. And so this is a name you just want to buy it, put it away in your portfolio, as we've done in our 12 best ideas portfolio. Love the name, and we will continue to hold it. A new ad for us is Spotify. For a whole host of reasons. We've owned it for a really long time. We sold Facebook, Meta, and bought Spotify and felt dumb for about 5 minutes, and Spotify's just taken off. But, Arthur, ever since they've opened up the Joe Rogan podcast to other platforms, it just was a brilliant move, and it's improved their advertising business dramatically. Do you use Spotify?
Yeah, I love it.
Do you? I
Yeah,
want to
I've
switch.
used it for years. I have a family plan. All the kids use it too.
Yeah, it's so much better, sorry, Apple, than Apple Music, and yet I have Apple Music, so that's on my list of things to do this year, along with, move, sell a house, that kind of stuff.
Buy a
But
horse.
I did buy a horse this weekend. I did. He's so
Go.
cute. But Spotify is last year was the year of monetization, and so the stock's up quite a bit. It was up over, I think, 100% last year, and since we've purchased it, very much more than that. But if you look at earnings growth, it's expected to be 58% this year, and then it decelerates sadly to 28% in 2026, and it's trading at a price earnings to growth ratio of 1 time. So I think this is the Netflix of music. Obviously, that's not super insightful, but we think this is a name, and it's pretty recession proof because it's probably the last thing you're going to cancel of all your subscriptions in a recession, or close. I don't know. Do you have Netflix, Arthur?
I do, but it's Hulu that's going to get axed first. That thing's ridiculously expensive.
Yeah, and I have YouTube TV, and it was really a great deal when it was $50 a month. It's now, I think, close to 90. So
Yeah. And I
I
don't
mean,
watch Disney, so I mean, like you have to get Disney and ESPN. SEC, the SEC's almost out of football for the year. So once that national championship's over, more than likely my Hulu accounts.
that's right. I'm done. Yeah, and then the other two, I'll just say very quickly because we've talked about them before. Goldman Sachs, another member of our 12 best ideas, it got downgraded today and went up. So that's, Wall Street downgrades don't really play into price performance over the medium term, and even sometimes in the short term. But M&A activity is going to increase, and this is probably the premier M&A name, not trading at a big multiple, 13.4 times. And then the last name is our poor man's NVIDIA, Broadcom. It hit the $1 trillion mark recently, and we think this party can continue for some time. Half software, half AI. But here's the best part. Hock Tan is the CEO, and he came out in the most recent earnings call and said that their incremental revenue from AI spend among existing clients, and they just added two big clients that aren't in these numbers, is 60 to 90 billion between now and 2027. So this name has a long way to go. They raised the dividend 11%. You're getting paid handsomely to wait, and so we will continue to hold this name as we have since the inception of the 12 best ideas portfolio in 2019. So that's my 5 for 25.
I don't have any clever 5 for 25s.
Well, you have a spaceship, and that's even better.
The only thing, Nancy, that we should talk about is rates.
Yes.
So
Yeah.
interesting thing that's happening here with rates. The 10 years at almost at a 563, or I don't even know what it's at today, but I haven't watched.
463. 4.
Sorry, 4. So yeah, got it. Freudian, maybe it's going there. But look at that, what's happened in rates. Fed's been dropping the short end of the curve, and yet the 10-year and the 30-year, I think the 30 years up to like a 485 now, and you've got big auctions coming. In fact, Byron and I were talking. Byron's our head of fixed income, And there's some big auctions. This debt issue, but this is not just the U.S. This is globally. But this debt issue of the developed countries and even emerging markets. People say, "Well, it's not a problem. It's never been a problem." And my joke, the running joke is, "It's not a problem until it's a problem." Duh.
Right.
But these auctions, and they're global. The size of these auctions that are coming out, China's financing huge amounts of their stimulus with debt financing, and the yuan's getting killed in that
Yeah.
fact. So there are consequences to this. The U.S. is in a different position than anybody else because the dollar underpins the whole global monetary system.
Yep.
That's the outcome from World War II. But at the same time, we're not immune from rates going up, and so it's not clear to me that that there's a good likelihood that U.S. rates continue to stay high or even go higher.
I think
Um,
and that's certainly Byron's view. And I think you're right. Like if you saw the Fed, has cut the short end 100 basis points and the yield on the 10-year has gone up 100 basis points. To your point, it's at 4.631. And when this started, we were at 3.6 before the Fed did the first cut in September. And the 30, to your point, is at 4.85. So we're pushing 5%. I think but we had this in the 90s. We had
yeah.
higher interest rates and we still had robust stock prices. So I think we can continue to enjoy a solid stock market and
I think we
economy.
were talking to, sorry to interrupt. Sorry, we were talking to John Sylvia last week. We were talking about how interest rates, they can slow down transactions and they can cause people to time rates. But at the same time, I mean, when I got into this, I was a bond trader for money manager called Bradford Marzak. When I got in, I was buying 18% Ginnie Maes. I mean, 18%, folks, not 18%, which means in order to have a Ginnie Mae, you had to actually have people buying and creating mortgages. So even in countries that have really high rates, still have transactions, you still have people buying houses. It just
Yep,
changes the price of the house is what it does.
that's right. My first mortgage was 12%, I think, or 12 and a half. Yeah.
Wow.
And we lived and we still bought new cars and,
Yeah.
we had kids. It all worked out.
I mean, houses are like bonds. They really are. The price, how the price changes. Rates typically
Yeah.
cause downward pressure on prices, although that hasn't happened yet because this is a strong economy. Even at GDP now, you says a 2.4, Nancy,
Yeah.
for
GDP
an
now.
economy this size. These are percentages. These aren't dollar amounts. 2.4% of our economy is a big number, and the nominal number is way bigger. What is it, like 5?
Yeah, before inflation. So
Yeah.
that's important for everyone to know. GDP is quoted after inflation. So that's 2.4% after you take out 2.5 to 3% inflation, depending on which metric. So Arthur's right. It's a big number. Big
It's a big
number.
number.
Yep. Well, great. I think this was fun. I enjoyed
Yeah.
hearing about your view on the global markets. We do talk about it, but usually when Arthur and I are talking about stuff, I'm not listening. So I'm multitasking. So this time I have to listen because you're all looking at it. So
See, people, this is the story of my life.
well,
I
thank
have 6 siblings, not 5.
and I'm the nasty older sister. Yeah. All right. Well, thank you so much. We'll have a special guest next week. So be back, join us again, and we look forward to seeing you.
Thanks, everybody.
Thanks.